Maybe Maggie did that to you.
Can you hear me now?
Yeah, there you go.
Yes.
There we go. Ah, technology. Woohoo! All right, everybody. I think we've got a majority of our registrants here, so we're going to go ahead and get this shindig on the road. Thank you, everybody, for taking time out of your day to come and attend the second edition of the AMBA online event, since we can't all be in person and see everybody's lovely faces. So we're hosting different and various events and webinars online to continue to add value to our associations. So you may see some things coming up. So just some housekeeping issues before we go ahead and get started. Everybody should be muted, but if you're not talking, please mute yourself. And then questions can be sent in through, and I'm pointing at the screen here, can be put in the chat feature, and then we'll answer those at the end where we've left a little bit of time. And then an awesome thing that I want to share that I think is super impactful to everybody coming up for each of the various chapters. And if other chapters are on the phone, I'm sharing some news here, but this is targeted towards AMBA right now, is that we are actually able to schedule, because we couldn't do lobby day, we're actually able to schedule virtual town halls with legislators that are located in the areas of each chapter. So make sure you attend those. The events were sent out last week to all the various chapters, but you'll be able to have a virtual town hall with your local representation, which is super impactful, especially during the hard times we're going through, and you can get some updates on what's going on in your area. And a big thank you goes to Mo and Kurt for getting that put together. So without further ado, I'd love to get it kicked off and get into the meat and potatoes. COVID has really impacted every aspect of our daily lives and really every aspect of our industry. So we decided to bring three panelists from very different sectors here to discuss some of those impacts, whether they be good or bad, and really talk about what's changed and what do we see coming in the future, or what's happening right now. So I'd like to do just a quick introduction. So I'm Gino Yaskovitz. I work for Rock Central, which is part of the Quicken Loans family of companies. I handle their state government affairs for them, basically a lobbyist, if you're looking for a word. And then we have in my virtual left, we have Randy McMichael. Randy is from McMichael and Gray and focuses on real estate transactions, real estate closing transactions. And then we have down in the bottom quarter here, we have Kobie Oruitt. He is from the National MBA. He's the Associate Director for State Government Affairs. So he is basically my counterpart at the National MBA. And then we have the lovely lady in the bottom corner here, Loretta Salzano from Franzine and Salzano. She advises mortgage lenders on licensing matters and compliance matters in all 50 states. So thank you, all of you, for being agreeing to be a part of this, and whether you liked it or not, but thank you. So thank you again for all of what you're going to contribute. So I'd like to first start with Kobie Oruitt, and we're gonna walk through kind of what's nationally going on from COVID and Kobie. So obviously the first question goes to you. COVID has greatly impacted our industry. What are some of the pressing issues from your perspective and from MBA's perspective that you're working on at National MBA, or tracking, or what are you guys really focusing on right now?
I think the biggest issue that we're tracking, and I think the industry is kind of, having this kind of stomach acid about, are the questions of forbearance for borrowers that are impacted by the COVID-19 pandemic. It's hit everyone hard. This is not something that our industry or anyone else could really have anticipated, but it does come with some real issues, especially if someone, was gainfully employed but now lost their job due to no fault of their own, because a lot of these states have been closing. They're looking for answers and looking for, kind of solutions from the government to kind of help them get through this time. One of the major things that we worked on as an association for the industry was really trying to get the federal legislation in a place that worked for both consumers and the industry. And that was done through the Federal CARES Act, which provides a robust assistance program for borrowers who have a federally regulated mortgage, and it's also a flexible and sustainable program. Uh, just kind of high level, some of the things that the CARES Act provides is forbearance for up to 12 months. It waives the assessments and penalties and late fees. It halts foreclosures and evictions for borrowers in homes that it was at least till, I believe, last week, May 17th, 2020, that there was a stay on foreclosures and evictions. It also provided loan modification options that lower payments or keep payments the same after the forbearance period. So we felt like that was a really robust, sustainable kind of program that provided consumers with some aid during this time. What we're really starting to see now, unfortunately, is that many state legislators that are probably well-meaning are introducing or passing legislation at breakneck speeds that either duplicate or, in some circumstances, conflict with the federal government has already done through the CARES Act. Places like California, New York, and DC have introduced legislation that will provide forbearance programs that, again, would conflict with what has already been done at the federal level. Particularly, what we were working on recently was the issue of a bill in DC, which was a part of, they had a deferment program that was a part of a larger COVID-19 omnibus that instilled requirements that clearly conflicted with things like OTC guidelines and other federal laws and regulations. Fortunately, I would say that MBA was successful in getting language included in the DC law that carves out federally backed residential commercial loans, which we hope to export that language to some of these other states that are introducing legislation that provides a similar forbearance program. And it's unfortunate because a lot of these proposed bills detract from the work servicers have already done to implement the CARES Act and the positive results that is providing for some consumers. In fact, 4 million consumers have already been provided mortgage forbearance in just a month. MBA, we've launched a weekly survey to measure forbearance activity, which captures approximately 77% or 38.4 million loans of forced mortgages in the country. Some of our key findings are that total loans in forbearance now stand at 7.91%, which our last reporting was on May 11th, compared to only 0.25% of all loans that were in forbearance for the week of March 2nd. The average speed in which consumer calls are answered the average speed to answer consumer calls dropped from 17.5 minutes, which was in April 7th, 2020, to 2.6 minutes on May 11th. So we really have ramped up as an industry our response to consumers and trying to address these issues. Also, call abandonment rates decreased from 25% on April 7th to 6.6% on May 11th. So we're really doing, as an industry, a great job to kind of respond to this crisis, I believe. And we're going to keep tracking these issues of forbearance and some of these other states that are trying to introduce legislation that would create conflicts and legal uncertainty in the market. So we'll continue to do that.
Yeah, awesome. And so, I mean, obviously it's problematic when a state comes in and tells you what you have, try to trump what you have to already federally do. So when Fannie and Freddie and all these other servicers or these other products tell you you have certain requirements you have to meet, and these states come in, that's obviously problematic. And so we want to definitely, one of the stories I think we can take away from this, and I don't think it'll happen here, but is to make sure that we're having conversations with folks and making sure that they're understanding how these forbearances work, what's available to clients. I think that's been going on, and I think you guys have been doing a great job of that, and working with all the attorney generals, the governors, and things of them to make sure they're all informed on what's available to these clients and how we're helping them, and the things that all these servicers out there are doing. So I think one of the other words that I think a lot of people have heard is liquidity. What is our concern there? Because I think that's just a term that's thrown out there really easily. What does liquidity mean to us in relation to the forbearance, and how is that impacting us? Because I know that we've talked about that at length a lot in a lot of conversations. So,
right. I think one of the concerns that some of these state legislatures have is that these non-bank servicers or non-bank lenders don't have enough liquidity to survive this. And the concern is that they're really going back to 2008 arguments about, look, the lenders, the servicers, they don't have enough liquidity. They can't meet the stress test. But honestly, we're not in a situation where it's 2008, where it's a situation that we potentially could have foreseen this as it being an issue. We're in a lot of these cases with the forbearance programs, we're fronting the interest, we're fronting the taxes, we're fronting the principal to the investors on behalf of the borrowers that can't pay. So to say that, we're not doing what we need to do regarding liquidity is, I think, the wrong assessment of what's going on right now.
Yeah, I think that's totally important to know that that we're doing the right things. The industry is doing the right things, and since the Great Recession has done the right things. And so totally shifting gears here, going in another direction. Let's talk about. I guess there's 5 other terminologies out here: is PRIN, RIN, RON, RUN, AVON. There's all these type of terminologies that everybody's hearing, and I'm sure, that's becoming super confusing. I know that a lot of us are probably familiar with RON, and we'll get to that in a little bit more specific detail with Randy. But Kobie, what is going on with RON and RIN and AVON and all these other things nationally? And have you guys been engaging? What has been going on there?
Why don't you first, Kobie, give everyone the lowdown on what those acronyms mean?
So the 2 that you really need to know are RON, as we call it, which is remote online notarization, and then there's RIN, which is remote ink notarization, which was coined by the GSEs. RON refers to a completely online process where a principal can communicate with the notary public to complete a notarial act remotely through a completely online process without having to see the person face to face, using software that allows you to communicate through audio-visual technology like we're doing right now, and allows you to complete financial transactions that require a notarial act that way. RIN is, I wouldn't say hybrid, because hybrid actually refers to a certain process of notarization, but it is a mixture of both the remote process, which is communicating through audio-visual technology, but the difference is, instead of getting an online seal or stamp through a RON, you're still sending your original signed document either through email or fax a lot of times to the notary, and then that notary acknowledges the information, signs it, and puts it in the file. So it really doesn't look too much different from what we currently have in a file. But some states are requiring you to indicate it actually was done remotely, to kind of explain why the one signature is a simile rather than wedding. Oh yeah, so one of the things that we've really been seeing for a lot of states, we have now 24 states that have enacted laws that enable RON. And we have a lot of states that were kind of scrambling during the beginning of the COVID-19 crisis to enable what we're deeming or calling RIN. So we're seeing a lot of states that are, trying to instill these emergency orders or create these emergency orders that allow for RIN, so we can continue with the financial services process. But the concern with RIN is that the kind of standards in which you can complete a RIN are kind of all over the place. At the bottom here, you have New York, which is pretty much flashing your ID in front of a camera, and that's all that's required when it comes to credential analysis and ID proofing. You have other states like New Hampshire, which are also RIN, but at least they require multi-factor identification and other types of security measures that make sure the transfer of information is safe for the consumer. As MBA, we've been kind of tracking these for a while. We're in the process of creating our own model executive order, as some of these states likely will consider extending their RIN guidelines, and hopefully we can get them to a point where their executive orders are consistent with what we have as model standards, what we created for RON, but have that as for RIN as well. So it is something for lenders. I think from our standpoint, we just want to, what do we care about? Saleability of the loan, and can it be insured? So I think the biggest concern in this process has really been for title insurers and making sure they're comfortable with the process. We've been tight communication with American Land Title Association and their members regarding this, and just making sure what's out there is something that they feel comfortable insuring at the end of the day, and the GSEs are willing to buy. So a lot going on with that. There are these other acronyms, TWIN, PRON, and those other things, but those would kind of, confuse us right now. But most importantly, what you need to know about is RON is out there, as well as the difference that RIN is from RON.
Yeah, and Kobie, I want to thank you. I mean, that's a great overview, and thank you for all your work that you do on the front for all of us nationally. I think that you guys have been a great advocate for a lot of those things, and we thank you for that. I just, as a reminder, any questions you have, you can always ask them in the chat. So this actually leads into a great switch to Randy and Ron. So thank you, Randy. First, before I let you get started here, thank you for your support as an industry partner. I think that's what goes without a doubt. Thank you for supporting everything that AMBA does and the continued support you all give to us. And so we just want to make sure to promote you as an industry partner and everything that you do. So,
well, Gino, thank you for that. Yeah, I mean, everything that Kobie said is 100% correct. We, the state of affairs right now in Georgia, we had a House Bill 785 that was presented. It didn't make it crossover, meaning it didn't make it from one chamber to the other. So hopefully it'll be back in the book sometime this year or next. Right now we have an executive order from Governor Kemp's office, and it basically, we don't have really RON or RIN. It is a video audio kind of platform. And so essentially I could watch Loretta sign, and she could show me her driver's license, and then she would actually take the original documents, FedEx them back to me, and then we would do it the old school way. We'd get our pens and stamp out and do it that way, as if she was here. It's basically just removing the presence requirement that we have on the books currently as far as law. So that's where we're at. The other thing, I know we're talking a lot about RON and RIN and so on and so forth, and other acronyms that are out there regarding remote online notaries. One thing I do want to also talk about really quickly, or at least get a plug for our partners, which is Chicago, First American, all the Fidelity families, Old Republic, and Stewart. March 13th, I left to go to Columbia, South Carolina, and Georgia felt like a safe place. Left, went to South Carolina, came back March 13th. The world had just gone up in smoke, so it was crazy. The first thing the challenge for us initially was not necessarily how do we get people in and get them to sign, it's how do we get our title product. So for a closing attorney, our supply chain is title. And we had 159 different municipalities treating this whole pandemic differently. Some were saying they were closed, but you could do so on and so forth. If you go to our GSCCCA website, which stands for the Georgia Court Clerk Cooperative, you can go on there and you can do an online search. The problem is if you go to terms of use, there is a disclaimer that says basically you can't rely on it. So we come back, we feel like maybe we can search, maybe we can't search. How do we deliver this product? Our partners, our underwriters, the ones I just mentioned, they stepped in and said, hey guys, guess what? We will expand the gap coverage. If you'll do a couple little things and get your lender partners to do a couple little things, we will ride over that as if that was not a problem for you. So that was the first hurdle we had to cross. They within just a couple hours, or not a couple hours, a couple days, stepped in and said, hey, we're going to assume risk. And we're going to do that because we realize if we don't, this whole thing will shut down. So before I talk about Ron or anything, I've got to give a huge shout out to our industry partners, the underwriters, the ones that I mentioned earlier. So it was great. Here in Georgia, we are kind of in just a holding pattern. The old laws are still in the books. We're allowed until June 13th to do this audio video platform, communication. It has worked well. It has not been used as much as I initially anticipated. If I had to have bet money, I would have said 50% of the people right away will want to say, hey, I'm going to come in and do it the traditional way. And 50% would say, hey, listen, I'm so aware of what's going on or so concerned about what's going on, I'd rather just do it from the comfort of my home. I would say 80 to 90% of the people have actually come into the office, some without mask. So some with masks and they want to stand 12 feet away. So it's been a mixed bag. People all have different way they go about life. And so we have to accommodate them as they come into the office. So I do hope that we do get something where consumers have choice as far as, the old fashioned way or, coming in and doing an actual ceremony or a RON platform. I think both would be great. More options I can offer people that are safe and secure, I'm all for it.
Yeah, understandable. So, I mean, do you see, and I'm just going to hang on Ron for a second, do you see anything that's preventing us from really, I mean, obviously HB 785 was introduced. What are some of the hurdles that you see that why we can't get Ron past here, or some of the hurdles that Georgia faces?
Well, I think it's like anything else. The hurdles are really easy. So you have the first part, right? We're having a video audio conference. I can see you. I believe it's you. Loretta I've met, so I know it's Loretta. Kobie, it's good to see you. I know it's you. So that part I think is very easy, right? The second part is how do we make sure that we can verify the signer's identity for people we don't know? 99.9% of the people that we come into contact with, we have a paper history or paper file on them that tells us who they are. But once they actually come to do the deed, we don't know who they are until they show us their driver's license. I think Kobie mentioned credential analysis, right? So there's either knowledge, I know it's you, or I've looked at something that tells me that it's you, or a couple of things usually. So it's either knowledge-based or authentication through credentials. So I think that's going to be the main part, is how do we give a product, to our lenders that says, hey, listen, we know for a fact, just as good, if not better, that the person that is signing via an audio, video communication or some other platform is the person that's doing it. They're not under duress. We're a third party. We're able to fix our seal or electronic signature. They've done the same. We can deliver these documents back to you. And then finally, the third part is secure. How are we delivering it securely? So that way the lender's information is not given, the consumer's information is not given, they can get back to them safely. And then finally, the recordation of that, how do we give it priority in each of the clerk's offices? So those are the hurdles. I don't think any of them are really insurmountable. The technology is there. It's just the implementation and the will and desire to do it.
Right.
So I'm actually kind of all for it. Like I said, I don't think it's going to put anyone out of business. The thing about a pandemic is it accelerates either adaptability, which usually is better for the consumer in the industry, or it puts people out of business. So you have to kind of adapt and be a little bit mobile. And we've we've been through things. You know, if you live 70 or 80 years, you're going to go through these sort of things. It's not going to be this thing. Hopefully not again. Hopefully it won't be another recession, but it's going to be a thing. So I think just being able to adapt and say, hey, listen, what's good for the consumer? If the consumer wins usually, and it's safe and secure for the consumer, it's usually a pretty good thing. So.
Yeah, I totally agree. I think we'll see a lot of innovation out of this crisis, unfortunately to say that, but we're going to see a lot of innovation through Ron, through other things that will, well, dramatically change our way we do business in every way, shape, and form. So I think you're 100% right. And this is not over. I mean, we all I think pretty much know that this is something we have to deal with for some time. So with that said, let's move into the next section here with the beautiful Loretta Salzano.
Work it, baby.
Yeah, so this is actually very, I think, poignant for you, like a good transition here is, well, first of all, thank you for everything you do for MBAG and AMBA and your years of help and listening to us hark on you and come to you with all of our problems and issues and help you and make sure you save the world here. So Loretta, what?
Save the world. No pressure.
What in your, what has impacted our world? Is it licensing, compliance? What have you seen? I know that there's tons of stuff out there.
My gosh. Yeah. Well, before I do, and I will, first let me put in a plug for the MBAG's COVID tab. There's a web page that's been built, and we've really tried to springboard off of the things that Kobie and the folks at MBA have used as well, so that we're sure that the information that we're posting at the MBAG tab is correct and complete. So I want to point that out to those who are in the audience, that they can check that. I mean, obviously it doesn't have everything you would need to know about how to adapt, and part of the challenge has been how fast things are moving, and all of you know that. You know, the world changed on March 13th, I guess because it was my birthday, and then it just has been crazy, you know, trying to stay ahead of the ball. And at first we were just dealing with things like Randy points out, you know, recorders' offices were closing, just trying to get the resources about who's open, who's closed, what are we doing. And Kobie and I spent a lot of time working together, like, okay, we got a fix for this thing in Georgia through the governor's order, but what is that going to mean for our members and secondary market delivery? So let me go through like some of the things, I guess, that have happened and that have involved, and remind everyone that these things do continue to evolve on a day-to-day basis. Right now I'm logged in, and when we're done, to the MBA Legal Issues and Regulatory Compliance Conference, and part of what they're addressing is how fast the ball is moving. So I think the important thing to remember is that the landscape is changing by the moment. And Gino, you reminded me when we were preparing, I think, about how the governors, much of this is timed to the health emergency, which might be different than the stay-at-home orders. So we might think, okay, all bets are off now. The governor's orders relative to the way we're doing notarization in Georgia is going back to the old way, but that's not the case until the health emergency is lifted. Randy, you talked about all the help that the underwriters have been giving for gap coverage and how you can do things differently during this transition period. And those deadlines are moving too, and they're moving by underwriter. So let's talk about some of the things that have happened. One was the recording office closures. It really surprised me. I didn't really think about that, how that impacts the whole chain. Obviously you did, Randy, because that's where, you know, much of your work starts. So it became immediately clear that there are more things for lenders to be mindful of. So the first thing was that in responding to the recording coverages and the recording office closure and the increased risk to the title insurance companies, they had to think, what are we going to do to perhaps mitigate that risk? So what they did is they came up with some new closing conditions and things that were required, like new affidavits, even though lenders didn't have to sign those. Those are new things in the package for buyers and sellers to sign. And there was a new condition written into title commitments that in essence gave the underwriters the right to add any conditions after closing of the loan and prior to funding of the loan, which usually would be fine, but that's really important for rescindable loans. If it turned out that the title underwriters had chose to use that authority, they could have put lenders in a pickle. Gratefully, despite that condition being there, no one has used it to add something that would be onerous to lenders, but it's something that lenders need to be aware of. You need to train, whether it's your underwriters, your post-closing shop, whoever that is, they need to be sensitive to changes in the conditions of the title commitment. So that's one thing to look for. Plus, they need to look for these additional documents so that they can educate their borrowers as appropriate. Another thing, and I think, Randy, your firm did this, is a lot of closing agents and law firms adopted additional agreements or forms like escrow agreements so that they could hold documents in trust until the recording offices opened up. So they're asking buyers and sellers to also execute new documents, in this case documents giving the settlement agent the right to hold the documents in trust until the offices open, so then they could record them, and they could do that automatically without getting any additional authority. So those are things that were training points, or should have been training points for lenders, so that their teams knew there's something else that you might see in the package, so you're prepared to respond to borrowers' questions and to mitigate your risk. Clearly, that was a challenge not just for closings, well, I guess let me talk first about closings. And Kobie, you really did. You know, MBA has done a bang-up job of keeping us up to date, working with ALTA about the patchwork of all of these states. Some of the states are doing it through legislation. Some of them are doing it through governor's orders. These executive orders are sometimes thrown together very quickly and without a lot of consideration with what's happening both in the state's legislative session, which is what happened in Georgia. What the governor signed is very different than what was introduced and got put into a study committee to not survive for this session, it seems. But thinking about what's happening nationally and all of those concerns. So that was a challenge, and it really was a challenge in educating the industry and secondary market about how what the governor's order did is different than what other states have done, and maybe even different than what Fannie Mae thought out of the gate, because Fannie Mae put Georgia on its list of, okay, we'll accept electronic notarization for Georgia, but they did it with hurdles to clear that made no sense with what the governor was doing. So it was very confusing to folks in Georgia who were trying to deliver loans that would go ultimately to Fannie Mae. Some of them were getting written approval from their contacts, but not all of them were. So it's very challenging, and it's going to continue to be that way. So you have to be sensitive to that. And then not just about closing loans in your offices being there, Randy, but what do our clients have to do as far as working from home? Because lots of states have rules that prohibit mortgage loan originators and others from working from home or from locations that aren't licensed locations. Now, gratefully, in Georgia, we haven't been strict about that in that Georgia already has accommodations for people to work from home, and most things that mortgage lenders do from home don't trigger a licensing requirement. You have to basically, there are 4 requirements, I think, and one is like you store documents at your house, you receive consumers at your house, you put your house on the address on documents, and most people don't do that. They're just working the way we are. So when you look to the NMLS website, and there's a plug for another great resource, is the NMLS has a COVID page where you can look and see what each state is doing relative to relaxation of work from home prohibitions. And in Georgia, all it says there basically is, look, we're now communicating, let's do everything electronically because people aren't going to be there working with paper. But it's something that the industry has moved toward, and I know, Kobie, it's probably something you're working on, is encouraging regulators to continue this trend of allowing those who previously had to work from licensed locations to work from home. It's something that we've all been working on, and at the last ombudsman meeting, it was a plea that we made that, look, regulators work from home and examiners work from home, and there are protocols and procedures you can enact to protect and safeguard consumers' non-public information, and certainly it's something that the mortgage industry can do. I think that there still is concern that we all need to think about in Georgia or otherwise, and regardless of our role in the settlement service industry, is to ensure that while we're working remotely, we're adequately supervising our employees. And how do we do that? It is a little more challenging. I know for us, most of us are working, we're working remotely, and it's just, certainly I can monitor the quality of folks' work, but you want to keep a gauge on how they're feeling and how they're surviving through this. And it is harder when you're not just bumping into each other in the office. So I encourage all lenders who are allowing folks to work remotely, think about how they keep an eye on every aspect of that employment relationship, from making sure that they're not working overtime to making sure that the quality of their work is there, and of course that they're doing okay emotionally and getting the support that they need to do a good job and to show up even when they're not showing up. So that's another thing to think about. There have been increased breaches, I believe, and I think we'll probably continue to see increased breaches of security, so we need to have a sensitivity to that. You know, there's never enough training about what?
I was going to say in breaches, when you mean breaches, do you mean like
well,
hackers?
I think like, yes, hackers, people clicking on emails, you know, that they shouldn't be clicking on to grant someone access to the system. You know, we saw a big ransomware attack that came through that kind of a breach. Thinking about new training and maybe systems that you have to protect your systems from folks trying to get at that NPI. I just heard from a title client this morning that there was a cyber fraud relative to wiring instructions. So we have to be ever diligent, and I think more diligent than ever now, not just in ensuring that we have adequate controls on our system, but that our people are remembering that, you know, but not to click on these things. So that's always a concern. Another thing that work at home has added is that I think a lot of people just aren't going to go back to full everybody in the office. You know, I've heard a lot of clients say, we used to have 100 people in the office, now we're working with 9 in the office, and we're really going to save a lot of money. We're going to renegotiate our lease when it comes time. We're not going to keep people in the office. I think that's really going to be a trend, and at least for folks that are permitted to work from home, who aren't in licensable roles. So that will have an impact. Another thing that happened because offices were closed, lots of people were closed, and lenders couldn't get the verifications that they usually would get to close a loan. So they had to make a decision based on risk. What are we going to do if we couldn't get the VOE or the VOR or whatever the verification was that we couldn't get? How are we going to move forward? And one of the things that a lot of our lenders were doing is implementing more robust borrower certifications for borrowers to sign at the time of closing, which is fine. But another thing that they were doing is because of the newness and the incidents, the heightened incidence of forbearance requests, is a lot of our lender clients, especially the independents, got really nervous about what would happen if their borrowers asked for forbearance the next day and what that would mean for their secondary market liability. I had one client tell me, look, all it would take is for my investor to put one of these back, you know, and I could be, or a handful, and I would be out of business. So what a lot of folks did is implemented attestations where borrowers would say that they hadn't lost their job, they didn't think they were going to lose their job, that they weren't experiencing a hardship from COVID-19. And it's fine to get those statements as of the date of closing, but some of them push the envelope. And I saw some, and they're probably still floating around out there, where borrowers waive the right to request forbearance. And that's a problem. You can't waive a consumer protection. So it's okay to say, I'm not experiencing a COVID hardship, and we drafted those to use the language right out of the CARES Act that Kobie talked about, and that they have no knowledge about a change in their situation at the time of closing. but they couldn't go so far as to waive that right. So we spent a lot of time drafting these types of certifications, attestations, and another don't on these attestations, or another thing for lenders to be mindful of, is if you're going to adopt those, and if you have some kind of a questionnaire that the borrower has to attest yes to every single one or certify the absence of changes, what are you going to do if the borrower stops or says, I can't sign this, or says they're uncertain? You have to think about, what are you going to do next? Are you going to deny the loan? And making sure you're treating similarly situated people similarly, so you could have a fair lending concern. We had one client that called and said that they had a borrower who said, can you guarantee me if I get this loan that I can forbear because I can't pay this? Well, that's different. That borrower said that, and they denied the loan for an underwriting concern because the borrower expressed an inability to make payments. So you want to think about that. There might be a way that you don't have to proceed with the loan if the borrower wouldn't otherwise qualify, which is very different than having them waive a consumer right. So you want to be sensitive to these things. Another issue that came up because of the forbearance, and I alluded to it was through the secondary market, is what does each and every purchase and sale agreement say? And there was a lot of concern about that a borrower's request for forbearance would serve as an early payment default. And each contract is different, unfortunately. And the contracts that were tied to language like delinquent or due, probably this wouldn't constitute an early payment default because the borrower wasn't required to make the payment. But this is an unprecedented event, and all these contracts weren't drafted with the intention that there would be some kind of federally mandated grace afforded consumers so that they're really not delinquent and that payment really isn't due. There were some contracts that we looked at that were very tight that just said if it wasn't paid on the date that it said in the note. In that case, then it probably would be an early payment default. And then thinking about the policy reasons related to that. So I encourage all of you who are lenders delivering loans into the secondary market to think about what those agreements say. And if you have a choice about the lender to whom you're going to deliver the loan, deliver it to the lender where the chances of an EPD are going to be low, if not non-existent. Or, if you have to push back, you'll have a basis to push back. We already talked about the Fannie and Freddie responding to this, RIN, RON, attestations, verification gaps, and forbearance. I think everything has worked itself out so that the mortgage markets have been continued to work. Don't you think, Kobie? I mean, it hasn't really stopped any of the mortgage market, what's happened. I mean, there's been risk, and we're worried about liquidity, as you mentioned, Gino, but things didn't come to a standstill.
Yeah, I think we were kind of fortunate, if you can say that, during this time, where, states have really indicated that we're a part of financial services and they deem financial services to be essential during these times. We've come up with a lot of different workarounds to kind of continue business. Of course, not as normal, not as usual, but fortunately, a lot of our industry has adapted very quickly to working from home. And going back to what you said about, this is going to change the way we do things. I think that, one of the things that we're talking about a lot is branch licensing. And and how that's going to look a lot different, or should look a lot different in the future, because as companies start to realize, wow, I can work from home, and it worked well during the pandemic relatively. We can do this more often, so there's going to be opportunities to potentially say, hey, hey, regulators, look, you said it could not be done. This is what you've always said. We can't do work from home from MLOs, but look how quickly, without really notice or anything, we've adapted to having LOs working from home, continuing business, serving consumers in your states. Let's talk about how branch licensing works in the future, because we've shown that working in a brick and mortar building doesn't necessarily mean we can't provide the best service possible. So that's something we're going to, start, thinking about as a as a community and trying to, how do we approach regulators about, what does branch licensing look in the future? What does it look like?
Well, and I know with the FHFA, there was a lot of controversy about how they responded, that's for sure. And, we had clients that, another thing that's happened is people are revisiting their LO comp plans and figuring out how they can modify those and maybe get MLOs to share more administrative expenses and other expenses, because even though lots of our clients had their biggest month by twice as much in volume because of what happened on the hedge, they ended up losing money, and liquidity became a problem already for them, for independents, as far as meeting their net worth requirements and their targets. And there was a lot of concern about that. And, it settled down. It was a blip as folks got a hold of that in the hedge, but it was really scary. And I think that there are going to be a lot of lenders who are still making up that deficit. And that's even lenders that don't hold loans or who aren't acting as servicers. So, I think that folks are still trepidatious, even with high volumes, about how they're going to manage their expenses and respond as the market continues to respond.
Yeah, it's going to be more difficult for the non-bank lenders to really function in this, I think, in the mortgage space after this and through this. I definitely agree. Well, we're just at about time here. But I wanted to, first of all, thank each and every one of you for taking the time out and adding so much value, and hopefully, answering some questions that some folks had. I think that one thing that I heard in each one of those statement or presentations is that we kept the industry or the economy afloat. I think that outside of toilet paper sales, the housing market, with it being still steady and continuing to hold and be able to still employ people, to still give people the savings that they needed to pay other bills because, of all the things that happened and the historic rates that we have. I think that each of those things that have happened, from the real estate section, from the compliance section, to what Kobie explained with the liquidity and forbearance stuff, I think that all played into keeping us all afloat, keeping the economy afloat, keeping the market afloat. So thank you again for each and every one of your time. So I did have, there's one question, I think we answered it, but we'll go over it just to make sure, as far as what is on MBA's website with Georgia and it not appearing that it allows for RON. So Georgia is one of the states that has not formally passed remote online notarization legislation, which would allow for the ability to legally do RON. What has happened is that Governor Kemp issued a executive order that allows for elements that are similar to RON, but it's not directly explicit for RON. But it's only utilized until the executive order goes away, which is what, like Loretta stated, with the health emergency, they're tied together.
Which is June 12th now, right?
12th or 13th, I can't remember. Yep.
Yeah.
But Loretta, do you know if there's a time period after that it stays in effect? I don't remember from your law.
I don't think so. I think it's tied right to the public emergency, which of course he could extend.
Yep. And who knows what's going to happen right now? I think we've been the test subjects for a lot of things right now, and so the nation's looking at us to see. And some people are a little crazy, so and out there not social distancing. So we'll see what happens. But I think that this does lay the foundation for continued conversations, like Randy mentioned, on RON and what the future of Georgia could look like. So if I don't get it, does anybody else have any questions, concerns, anything before we go ahead and end today's presentation? Last minute statements from any of you guys?
The one cool thing I'll say that's happened, we have, let's call it 10 to 15 documents that we've always presented at closing, and depending on the attorney, it took a certain amount of time, and then lenders had certain documents that didn't require witnesses and notaries, and that had a certain amount of time assigned to it. What we're finding is we are delivering most of our documents that are not essential lenders, really between us and the signer, we're delivering those via DocuSign and getting those back, which is shaving some time off. And then also the lenders are actually also presenting documents prior to closing, and that's shaving a lot of time off. So it allows for what used to take 45 minutes to an hour is now taking 20 to 35 minutes. We have those what we call quick closes, and so that's been phenomenal. Just how quickly the private sector has been able to respond and say, "Hey, listen, we don't have to do it the way we've always done it. We're going to try this." And it's still just as secure. It keeps us in the same place. It's sellable to the secondary market. That's been wonderful to work with the lenders that have participated in that. So.
That's so crazy. Like, that is the simplest thing, and it's funny how it took a crisis to to figure out. Well, hey, we don't actually need to have all these documents signed at closing. We can actually have them be pre-signed. So that it's crazy that something like that we could have done for the last long time, and then we figured it out. So yeah, that's very interesting. Anything else? All right. I appreciate everybody's time today. Thank you again, and thank you. Our thank yous go out from AMBA for your continued support and your membership, and make sure that you do sign up for the Lobby Day virtual town halls. I think that's going to be very impactful to you and your business. So have a good one, everybody.
Thank you, Gino.
Thank
Ciao.
you.
Bye.